So, Ronnie, one question I get from buyers is like, well, who should I use for a loan? I see online there's this rate of 2%. I see over here this guy's advertising this and all these different advertisements. Um, Give me a rundown of no matter who the consumer is thinking about using, what should they look for in a lender?
Great question. And as an investor, as a loan officer, I encourage our clients to shop around. And I know that sounds crazy. I tell clients is that I encourage you to shop around, but I want you to do it with knowledge. And I break it down as follows. I tell clients that there are three things you need to do when shopping. We obviously want to shop interest rate. We want to shop closing costs. But the third thing is what a lot of clients leave out. We want to shop service. Service is equally important to the interest rate and the closing cost. So let's break down each one of those. Interest rates. All investors, I work for a community bank, but we have over 13 investors that I can actually shop rates and lock our clients in on. So I'm actually doing the shopping for the buyers, right? They'll go out and call 15 lenders. Well, I'm approved with several investors where I have their rate sheet. So when I go in and I priced out my client scenario, it tells me who's going to offer them the best rate on that specific day based on their specific scenario, credit score, down payment, loan to value. Closing costs, right? So when it comes to closing costs, this is really important because a lot of clients, when you see those advertisements that you were referring to earlier, 3%, 2%, if you read the fine print, hopefully those investors are putting the fine print in there. Every one of those rates are based off of 800 plus credit scores in their marketing advertisement. They're based with a 40% down payment, and they're based on a buyer spending 1 to 2 to 3% in what we call buy down fees. And what a buy down fee is we have something called a par rate, Troy. And what a par rate is if you look at a grid of interest rates, right? I have rates that go down all the way to 4.375%, which if I wanted to go market that today, I would get calls, left and right. But if you go down to 4.375%, you are going to spend a lot of upfront costs, meaning buy down fee at closing to get that interest rate. That buy down fee is a percentage fee of your loan amount. The higher you go in interest rate, and we'll use that 4.3, right? If I go to 4.75, five and a quarter, five and a half, the higher I go in interest rate, the lower the cost, the buy down fee is. But what we want to start with is something called a par rate. What a par rate is meaning it's a rate that's not costing you any money, right? And it's not costing you any buy down fees. But that par interest rate, the higher you go over that rate, it's actually going to start giving your client a lender credit to actually pay closing costs. So when shopping interest rates, we want to be careful because a lot of those investors will quote a very low interest rate, but once the client actually gets their loan estimate, they're going to look at fees that are significantly high with a very low interest rate. And any lender can offer that. I can offer that. But what I'm trying to do is when going back to our original conversation is when I engage with the borrower, what are we trying to do short term versus long term? I'm trying to find an interest rate that meets what their goals are, right?
So it's
And
important. It's important again to go back to you talked about rates, you talked about cost, you talked about service. If there's a rate online and it says 2.9%, hypothetically, sure, you can offer 2.9%, but what's it going to cost? This is your service. What's it going to cost that borrower to get that 2.9%?
correct. And the cost can be monetary costs, right? Dollar amounts that are actually applied towards closing, but also the service related piece of this is so important. Listen, I'll be honest with you, is I've dealt with buyers that have shopped left and right, and they would find, well, I'm going to pick on an online investor today, but they'll go online and plug in all their information, and they'll get 100 calls from all these individuals that are just basically what we call pipeline stuffers. They want to stuff these loan officers want to stuff their pipeline with clients, and they'll tell them anything and everything that they want to hear to get them to originate a loan with them. And Troy, we have to be careful because not every client is similar to the next client. That we have, there's certain a loan officer really needs to understand a buyer scenario and the guidelines that are associated with it. And some loan officers, if they're more detail oriented and actually just filling up their pipeline than actually understanding how to navigate through a loan application. What good is a 2% rate if I offered you 2% today and I put you through the ringer in underwriting and I actually never closed your loan? It means nothing. And the service piece of it is where it comes to knowledge of guidelines, understanding the client's needs, understanding with my underwriters who are on staff, by the way, I don't have to broker out a transaction, where I can actually understand in this specific scenario how my underwriter would address it. And if I don't understand how an underwriter would address it, they're just a phone call away where I can explain it. And that is so important to a transaction. Again, going back to how important it is, it's equally important to closing costs and equally important to interest rate.
Yeah, you bring up a great point that there are lenders out there that fill their pipeline with potential borrowers that are just running numbers, and they're not focused on the client's wants and needs. They will, and I'm going to pick on some of the online stuff too, is they will focus on what I call a teaser rate, which is going to reiterate what you said, a teaser rate of 2.9%. Right. But in that fine print, if it's even there, it doesn't say with 20% down, 800 plus FICO score, and 3 points in closing costs to bring this rate down to a permanent buy down. Right. They don't explain that. So people get excited and they say, man, I can get this for 2.9%. Right. Why is this bank over here saying, well, interest rates are 6%? Because the reality is that at 6%, you may have much less money out of your pocket to make it happen. And then there's the other options, the temporary buy down, so on and so forth. But it's so important that consumers build a relationship with that lender so that the lender understands what their wants and needs are. The lender understands what their comfort zone is. And the lender also will shop. I think you said something very important. We'll shop for different rates and, most importantly, different programs that suit that buyer's needs at the time for the long term.
Correct. And I always tell my clients, again, I encourage you to shop. This is a big purchase. I want you to be comfortable with what I'm going through with you, but I also want you to measure it to someone else. But at the same time, use me as a resource. Send me the quotes that you're receiving from the other investors and let me educate you. If it really is a true bona fide quote that can't be beaten, I'll explain that to you. But if it really is muddy, the water is muddy, if the water's not clear because the loan estimate has some hidden fees in there, I'll actually be able to illustrate those to a client and help them guide them through scenarios. So, and that's part of the service piece of it.
Yeah, and I love that. And I think it's the same thing on both sides of the fence that we're talking about here. We work hand in hand as a real estate professional listing and selling homes, and as a lender providing loan options. It's important that the homeowner or the buyer understands what true options are, because sometimes the shiny object isn't so shiny when you start breaking it down on that teaser rate. It's so important for consumers to have a personal relationship with the people that they're working with. It's easy just to say, I would like to do X, Y, and Z, and here's the rate, and you start moving forward. And the saddest thing is that when clients come back to me and say, man, I thought I was getting 3%, but the APR was 5.9.
Right.
Which is a whole nother conversation that we could have about rates and what APRs and et cetera, et cetera. So in a nutshell, if a client was to reach out to you right now to say, I'm looking to buy a home, what are the three things that you would focus on? I know that you mentioned rate. I know that you mentioned term and you mentioned customer service. How would you, in a conversation, how would you go over those with a client?
Well, I would start by asking them if we've nailed down a specific property, or if we're just in the beginning stages, which that helps me understand the speed of which we need to apply, right? So that is a key component. But I would also ask them if they've been talking to other investors, so I can actually maybe even look at an estimate, or if they received an estimate. And that's a key component, is sometimes these lenders will actually just give them verbal quotes and not send them an estimate, and that a verbal quote is nothing. It doesn't mean anything to a buyer unless it's actually on paper, right? I really, I go back to, it's the conversation piece of actually engaging with a buyer to figure out where we are in this process, and where I can jump in to help them. And then obviously talk about the rate and service and closing costs, and hopefully if I have a buyer that understands what we're going through, I think that they'll be inclined to engage in conversation, and hopefully end up looking to work with us.
I agree with you 100%. The key in any type of investment, because that's what a home is having open communication, being willing to be educated, and being comfortable with the person in which you're working with. I
Right.
know in my experience, and I know from your experience, again, this is not a one and done. This is a long-term relationship that we build with people to go, hey, on the lending side, it's been a couple of years and rates are different. Hey, I was thinking about you and I noticed that rates are maybe a little bit better. It's something to consider. It's not a pushy thing. It's keeping people informed all the time so they can make the best decision for themselves, their family, and their money.